Major support for Carolina Business Review provided by Grant Thornton. Operating in more than 100 countries, our tax, audit, and advisory professionals specialize in helping companies unlock their growth potential. Colonial Life, providing benefits to employees to help them protect their family, their finances, and their futures. High Point University, the premier life skills university, focused on preparing students for the world as it is going to be. And Sunoco, a global manufacturer of consumer and industrial packaging products and provider of packaging services with more than 300 operations in 35 countries.
We were in such a hurry to say goodbye to 2020 that we assumed 2021 would be different, better, maybe even. I'm Chris William, and welcome again to the most widely watched and longest-running source of Carolina business, policy, and public affairs, seen every week across the Carolinas for more than 30 years now. Thank you for supporting this dialogue. In a moment, we start with part 2 of our special year-end, year-beginning two-part series around economic forecast, and that starts in a moment with 4 of our resident economists. Stay with us.
Gratefully acknowledging support by Martin Marietta, a leading provider of natural resource-based building materials, providing the foundation upon which our communities improve and grow. Blue Cross Blue Shield of South Carolina, an independent licensee of the Blue Cross and Blue Shield Association. Visit us at southcarolinablues.com. The Duke Endowment, a private foundation enriching communities in the Carolinas through higher education, healthcare, rural churches, and children's services. Barings, a leading global asset management firm dedicated to meeting the evolving investment and capital needs of its clients. Learn more at barings.com. On this edition of Carolina Business Review, an economic forecast for 2021, featuring Sarah House of Wells Fargo Securities, Dr. John Connaughton of UNC Charlotte, Dr. Doug Woodward from the Darla School of Business, University of South Carolina, and Dr. Frank Hefner from the College of Charleston.
Happy New Year and welcome back to the most widely watched program here in the Carolinas about business, policy, and public affairs. We are glad to be on part 2 of what is an economic forecast with our resident economists, and we're glad to have them all back. Gentlemen, lady, welcome. And Sarah, we'll start with you. Sarah, do you expect that the advent and the application of vaccines now, will that be a game changer? Is it all going to be different? Are we going back to normal?
It will be a game changer to an extent, but I don't think we're going fully back to normal for quite a while. So one, it's going to take some time for these vaccines to roll out. And so I think the first half of the year will look very different than the second half of the year. You still need to get people to take these vaccines. So even when it does become widely available and enough for every American to have one. But I think by and large, we're already seeing the relationship with the virus change a little bit. So people have a higher risk tolerance. Businesses have adapted in ways where we can continue on with some semblance of normal and still feel somewhat safe. And so I think that's going to help the overall outlook as the year progresses. But I think, second half of the year will look a little bit more like what we saw pre-pandemic, but I think some things which we can get into some trends are probably going to be sticking around for a while.
Dr. Connaughton, do you expect certainty to come rushing back in because of the vaccine?
No, that's not going to happen. First of all, so far what we know is we've got 50 million, that's 25 million doses of the Pfizer vaccine that can be distributed between now and say the end of January. Next week, the Moderna is, when we're taping this, is on track to be approved as well. That's another 50 million doses of 20. So we got 50 million people who will probably get vaccinated in the first quarter of the year. There's no indication as to what the ramp up is for other vaccines that will come for approval or for additional doses of the Pfizer and Moderna, and how quickly they'll come. So I really don't expect to see much of a change in the first quarter of this year, because we're going to be focusing on healthcare workers, first responders, elderly in nursing homes, and they're not the ones that drive the economy, okay? And so, it's not going to be till the second quarter we get some kind of idea if this is going to be a game changer or not.
Dr. Hefner, Dr. Woodward, what do you think?
Well,
I'm
go
saying
ahead.
with second half of the year is really when things will start to improve for the broader economy, especially if we can open up to travel. That's the part of the economy that's been suppressed so much. And that includes business travel. When people can show that they've got immunity, they've taken a vaccine and they can test this, it's going to take a while, but we want to do it. So I think it's going to be the second part of 2021 where we're going to see the economy that's been hurt the most is going to start to be able to benefit and open up, and we're really going to move back to normal. So from that point of view, I think the vaccine is a game changer for 2021.
So you used an interesting term, back to normal. I mean, I kind of remember from the last recession where for years we were talking, is this the new normal? So we're going to go through where there's a whole generation of our students coming out that have no idea what we mean when we say what is normal, because they've been used to this. And one thing about people is once they get used to something, they accommodate and they deal with it. And so to the extent that some of the protocols that we've established right now, yes, I think the vaccine could be a game changer. There's so many uncertainties there. I hate to speculate on them because I'm not a scientist in that area, and I don't want to add fuel to fires where people aren't sure about vaccines. But we've established protocols on hygiene that I hope we continue to see as part of the new normal. And not necessarily face masks, but certainly hand washing and things like that. And then also cleanliness and hygiene in public spaces. We need to keep doing that for the rest of my life, the rest of everyone else's life. And that I'm hoping will become the new normal.
Let's look down the road here in 2021 and compare and contrast to 2020. And Sarah, back to you on this. So education really was, I wouldn't say hollowed out when it came to funding, but was certainly uncertain. And so two questions. You've got education, and then you've got commercial and residential real estate. Two different ends of the spectrum. Let's start with education. What happens with education funding, both public, but also at the higher ed level? Are we going to see a continued surprise in whatever new education funding looks like?
Well, I think obviously state and local governments are going to be under a lot of pressure. So the budget situations aren't nearly as dire as I think is what a lot of budget analysts were expecting at the onset of the crisis, in part thanks to that fiscal stimulus, that strong good spending. But I think you are still going to see budgets under pressure. But I think just, one area where we were just talking about the vaccine could be a game changer is just getting kids back in school. And so that has widespread implications for things like just parents going back to work too. So that'll be important for the labor market as well this year. As far as the real estate market, so we're expecting that housing will continue to do really well this year. So even as maybe that need for space isn't quite as dramatic as what it was in 2020, you still have some pretty favorable effects going on, like low mortgage rates. Millennials in 2021, the oldest of them will actually turn 40. So they're at their family forming, home buying years. And so that's very supportive. But on the flip side, you're still going to see a lot of pressure on, smaller apartment living. I think even as we see workers going back to the office, businesses probably realize they don't need quite as much space, and they've grown more comfortable with remote work. And so I think you're going to see a lot of different dynamics play out in the year ahead, where some of the trends that we saw set into motion in 2020 will stick around for a while.
Gentlemen, what do you think?
I think South Carolina is going to benefit a lot from this in the sense of more in migration for a lot of the points that Sarah just alluded to. And one of them is, if you're in a large city, a Detroit or New York or Boston, and you're finding what happens when you have lockdowns, and you find that life is just real difficult in these huge environments. We're already seeing an influx of people coming into the low country who are trying to find a different quality of life, and that's helping, besides low interest rates, propping up our housing market or residential market. I think we're going to see that continuing as people decide to telecommute, and they want to get into what right now we're looking at like safer environments, but I think they're going to find lifestyle issues also become. So it's going to be a restructuring across the board.
I agree with Frank. I think the Carolinas are going to benefit a lot going forward because of the migration. Where we saw before, I look going into 2019, we were getting a significant net in migration in the Carolina, North Carolina, more from the north, like from the South Carolina, more from North Carolina, oddly enough. But a lot of people coming in from the north. Is this remote work trend, which I think is going to continue, benefits us. We used to think our low density cities were a disadvantage. You know, people wanted to congregate in density cities because of what we call urban agglomeration. I think that's flipping right now, where now lower density areas that which we have in the Carolina cities are more sprawled out, which we used to think that was a negative, becomes a positive for us. And I think our housing is going to continue to do well. And we're going to see growing population.
So, John, back to
I was going to say, I just want yeah, a couple of observations on I want to go back where Frank was about behavior. And this is going to be real interesting going forward. We've seen a lot of changes in the way people behave socially and interact socially. And I think that's going to have some significant impacts on businesses going forward in terms of proximity of seating, certainly the way they pack airlines, you know, intra-city transportation, buses and subways. I think there are a lot of things that are going to change as a result of this that are going to be permanent. People are going to change the way, it's not just because of COVID, but now, yeah, I don't want to get a cold, I don't want to get the flu, whatever. And so I think people are going to start to change, and I think that's going to have some ripple effects throughout the national economy as a result.
I don't want to leave this, and I mentioned education, and I'm sensitive that three of you are employed by higher education, but I'm going to put you on the spot here a little bit. Doug, USC is a major employer, not just the Midlands, but across the state. And not just USC, but any education, any higher educational institution, private, small, parochial, Catholic, whatever. How does coming out of what we just experienced with COVID and the implications of the public health care crisis, I mean, we've even had university presidents say clearly some schools are going away and there will be consolidation. Will this be widespread or will it be anecdotal?
I think more on the anecdotal side. I think, well, at least the big state U's, like where I teach to South Carolina, we worried a lot about a significant loss of student enrollment in 2020. It didn't happen. We met our targets. Students came back. They're valuing higher education more than they did before. Before they were wondering, why are we paying this high tuition? Now they're sitting at home and they're beginning to understand why they like the interactions that they get with students and with professors in a university campus. And it's really working to our benefit. Now, that's not going to help all colleges. I think the smaller liberal arts colleges that were struggling before are probably the ones that are going to potentially go under. There'll be some shakeout. Plus, the demographics, you know, are not in our favor. There's a shrinking student population. So some are going to come out of this even better, but there will be a shakeout, I think, in higher education. The other thing that's odd is that community college enrollment is not been as high as you would expect at this time. So that's another thing we have to think about in the future. Why is that happening? We would think that we'd see more back to school to get skills at this time when the economy is not doing well.
And this is a question for anyone. Do you expect that there's going to be continued pricing power on tuition? And I'm not talking about tuition increases, just maintaining a current tuition level.
So
I'll just chime in with what Doug said earlier. We've seen an increase in enrollment this year versus last year at UNC Charlotte.
UNC Charlotte.
Yeah, and you know, again, but I want to. This is something that's fairly interesting to me, anyway. There had been a lot of push to online classes in the past decade or so. Some schools have gone into this much heavier than others. But what I've found anyway, and I think a lot of us have found, is that now that we have a lot of online delivery of our courses, it's not quite the same, and it doesn't work for all students. There is a percentage of the students where this is just as good as in person, but there's a significant percent of students where this is not just as good as in person. It's hard sometimes for students to engage. And so I think the push for online is probably going to get kind of pushed aside when this is all over and we can have 100% in-person classes or close to that in-person classes, probably in the fall of 2021.
Sarah.
I'll just say that, John, people value this experience now. And to get back to Chris's question, we'll want to pay they know what they're paying for, with this higher tuition. They see this when they have to go online, and they're missing that. So I think universities that provide a good experience for children or for students are going to do well and be able to at least keep the line on the. I think it's recognized as something that people are willing to pay for.
Sarah, I knew you were trying to get in there, please.
No, I think the gentleman covered it well. Thanks.
Okay.
Well, I want to, Doug raised the issue of children, and that's a concern I have about my future classes as they come into colleges. I mean, we already know there's a slip in the summer vacation in elementary schools in terms of retention of material and readiness to go to class. Well, with everything that's been going on, we're already reporting possibly increasing slippages. So we're going to have potentially a number of students who are going to be starting various grade levels in elementary and high school that are going to be behind the curve compared to, say, 10 years ago. Mm-hmm. And I think that's a big concern for us going forward. It's nothing that as an economist we can deal with. Educators, I mean, they already realize this. So hopefully they'll come up with a plan that deals with it and effectively solve the problem.
And just to follow up on that quickly, Frank, but if everyone is under the same pressure, and I understand you say not just year over year, but 10 years comparatively to 10 years. But if everyone, both undergrad, K through 12, have the same, let's call it a gap year to some degree, is it really going to matter over a longer term if everyone is held to the same standard?
But everyone's not having the same gap year.
Comparing each other to each other, I mean, well, but in one sense, if you're comparing students now to 10 years ago, it does matter. And so that affects a whole host of other issues, productivity, future growth, and things like that. It's not as relevant to university students. They don't necessarily have the same slippage. It's really relevant to lower grades. And that needs to be dealt with. And thank goodness, there are a lot of educators that are already aware of it. And I'm sure they're going to hopefully come up with a good plan for it.
But Chris, not everybody has experienced that gap.
Yeah, but I want to ask you something specifically, John, because you said in public comments recently that consumer confidence was on shaky ground. How shaky?
Well, it had been shaky for quite a while during this pandemic, but the October number was up, which I think surprised everybody. But that was before the recent spike, and so we'll see what happens. But it's not anywhere near where it was a year ago. It's considerably off. I mean, in February of 2020, it was 130. The consumer confidence number, it got as low as in the high 70s, but now it's at 96, but it's still way off from where it was when this thing started. And that's the October number, like I said, before we've seen this fourth quarter spike. The fourth quarter spike is something that's going to be very interesting to see how it plays out. We won't know until the end of January when the GDP number comes out. But there are a lot of economists that were expecting not a double-digit increase in GDP, annualized rate increase in GDP in the fourth quarter, but something in the high single digits, 7%, 8%. That might not transpire.
Sarah, that's certainly. Go ahead, please. I'm sorry.
Well, I was going to go back to history.
No. Hold on, Frank. We got to let Sarah. We keep stepping over on this. Go ahead.
Well, I was just going to say, I think we are already seeing that slowdown. If you look at some of the latest jobs figures, even some of the spending data. And so, really where that's starting to hit is late in the quarter, and, probably the December numbers are going to be pretty ugly as well. And so we are looking at pretty weak rate of growth kind of out of the gate in 2021, just as we do have this overhang of this latest wave of COVID and renewed efforts to combat it. So whether that's people's own behavioral changes or some of the localized restrictions that we've seen as well.
Go ahead, Frank.
So John alluded to the fact that the last time we've seen anything like this was the pandemic of 1918 and 19, which of course was, spread like wildfires, returning troops came back and went around the world. We're now seeing how interconnectivity worldwide helps spread these things very quickly. I mean, from China to Milan, for example, very quickly. But I just remind everyone about the history of it. Following 1919 was the Roaring '20s. And so the question then is there, we're going to see a similar event in terms of pent-up demands and loose monetary policy. Could this spur a Roaring '20 type situation? And that's a very likely scenario.
Well, we've already had a roaring 20 type situation in the stock market. We're already to 1929 in the stock market. So we skipped the whole roaring 20s and got right to the precipice of the Great Depression, you know, and just looking at the stock market, which is very contraction in the economy. This market boomed. Yeah. I don't think that's really ever happened before.
We've got a few minutes left. I'm sorry, Sarah. We've got a few minutes left. And Sarah, maybe you can lead on this one. We've got a few minutes left. And the idea that it was no small thing, that there was a change in the White House. There is a change in the White House. That's change in political leadership. And yet to see about these special elections in Georgia. But at the time of this taping yet, there has been no decision about the Senate race in Georgia. But if we look at political leadership, that means policy, that means fiscal policy. What can we expect in 2020 when it comes to fiscal policy, either in Congress or in the White House?
So I think it's still going to be pretty tough to get anything major done beyond some additional COVID relief. So, you know, as we're talking right now, we don't have another support package. But I think when you look at the fact that even if the Democrats end up taking the Senate, which is not our base expectations and not really where, you know, we're going to be pretty tough to get any sort of sweeping major legislation done under dividement. And so we're not looking for major policy changes. Instead, it's going to be around the edges and really where you can do executive order. So that goes back to trade. So trade's probably likely to crop back up on the list of topics as the COVID situation improves. It's also going to be in terms of judicial, regulatory policy as well. So I think in many ways the policy changes in the upcoming year with divided government are probably likely to be fairly small.
Anybody a different take?
I think that in general, the political impact on the economy is pretty small, regardless of whether it's Republican or Democrat, regardless of whether or not the Senate goes Democrat or Republican. I'm not sure it's going to matter a whole lot. I think that the pent-up demand that we have and the effectiveness of the vaccine over the first half of the year are really what's going to rule 2021. If it goes as expected and the vaccine works and people take it, and sometime by the middle of the year we reach so-called herd immunity between a combination of infection and vaccine, then the second half of the year is going to be fine no matter what takes place in Congress or what the executive orders the president puts into place.
Frank and Doug, what about monetary policy? Is Powell secure in his job? Is there some sense that there's going to be stability on in the federal bank?
Well, I think in general, there's going to be more stability with this administration than there was the last administration, just across the board in terms of positions. We're not going to see that revolving door where people come in and they're out. I mean, how many secretaries of defense have we had, et cetera, et cetera. But no, I think what I'd like to say in terms of what the year is going to look like, with all the quantitative easing, or however you want to call it, since we've been calling it that since about 2010, I'm still going to maintain that we're going to have an inflation and interest rates are going to go up. And one of these years, I'm going to get it right. But I'm not too sure if it's going to be this year.
It might be the year because we have talked about it. One of the reasons inflation might go up is because the dollar value is going down. That means we're importing more at higher prices, gives more price power to domestic producers. And I think that's something people aren't paying enough attention to when we talk about monetary policy. We've had this big expansion of liquidity that's also been depreciating the dollar. And that's typically where you get into trouble and you start to get into an inflationary spiral. And that's going to change the whole nature of Fed policy. They can't keep saying we're just going to keep doing this forever. They're going to have to deal with a real problem. I'd really pay attention to how the dollar performs.
Well, so are you saying, sorry, hold on one second, Sarah. So Doug, are you saying in so many words that you expect inflation to creep back up this year, coming year?
It will creep back up, yes. I mean, all that liquidity there is now in assets. It's going to start going back into goods and services is what we talk about inflation. So we'll start to see it tick up. And I think this would be very interesting to watch. I'm not saying it's going to happen, quickly, but it's going to happen. And I think we'll start to see that.
Okay. Sarah, I'm sorry, I interrupted you.
Yeah, I'd say it's more of actually a services story. So even with the dollar depreciating, I mean, goods only make up a third of the total inflation index, and even less of what's the core kind of the benchmark that the Fed's looking at when they're setting monetary policy. I think it's really some of the services where there is some pent up demand and people haven't been able to get out and get out and about. That's where you're likely to see the inflation. So we've actually already seen pretty strong goods inflation this year, as you have seen supply chain issues and some bottlenecks. But I think as consumers shift their spending back towards services, and they've kind of stocked up on a lot of the goods that they need for a while, that it's really going to be services where we get the lift to inflation.
Lady, gentlemen, thank you. It seems like we've kind of got a consensus on inflation, so we'll stop there and hold your feet to the fire next year, 12 months from now on that same one. But we so appreciate you all joining us every time. You're great sports, and especially when we're doing it here virtually with all the technology challenges. You're thoroughgoing professionals, and we greatly appreciate it. So thank you, and Happy New Year to you all. Thank you for joining us. Happy New Year to you. If you have any questions or comments, carolinabusinessreview.org.
Major funding for
next week,
Carolina Business Review provided by High Point University, Martin Marietta, Colonial Life, the Duke Endowment, Barings, Grant Thornton, Sunoco, Blue Cross Blue Shield of South Carolina, and by viewers like you. Thank you.